Hello everyone, and a very warm welcome to today's cryptocurrencies update for Friday, February the 17th, 2023. Quick household item. US stock markets or financial markets, it includes bond markets and other things, are closed on Monday, February the 20th in observance of President's Day. I will therefore also be out of the office because I have days off on stock market holidays as well. And I will not return until Thursday, the 23rd. So there will be no updates for the next 3 days. However, all cryptos are still on track. We have continued strength in Cardano and Polygon, but we've resolved it and we've presented more bullish options and they're tracking along quite nicely. Bitcoin should be in its swift wave, ideally 26.28, stiff resistance at 25.5. Ethereum also in its fifth wave, ideally 1800 to 1200, but I prefer the lower end because the higher we go, actually the more bearish that can be longer term, strangely enough. Solana, I still think 2830 should be doable. Avalanche and Binance Coin should be in their B-wave bounces. So far, so good. I haven't missed a beat on that one. Curve, I'll show you, has done very nice 5 waves up, but no signs of a reversal yet. And Link is holding its 200-day moving average, but it must bust through 750 to target the $8 to $9. So there's a lot of typical fifth wave negative divergence on many technical indicators on many charts. Those are a condition, they're not a signal, and that can always be erased with continued strength, but we should take it into consideration with our trading. So it is very prudent to raise stops and take partial profits, for example. Do whatever you want to do, but please take everything and every information into consideration so you prevent disaster to your portfolio. It is your fiduciary duty, obligation to make sure that you protect your hard-earned money. If you're careless about your money, you deserve to lose it all, and that's why we see those headlines in bear markets, because those people lose it and they deserve to lose it because they're reckless. That said, the next bigger decline will tell us if Bitcoin will reach 8,000 to 10,000, Ethereum 600 to 300, or if we only see it about 20% correction and then new all-time highs. So I think there are very exciting times ahead, and this ain't no 2022. So things are already very different from the get-go this year compared to last year. And from a short-term perspective, a lot of these cryptos, if they drop below yesterday's low, then we can consider their tops in place. And this is the reasoning on why we have to have stop losses in place, because at the end of the road, you will have a lot more money left if you get stopped out versus those that don't. Please read all the slides accordingly. I just have to go through them so I can finally reach the link. And here we have it. So this is Cardano. This is our preferred wave count. It topped right here at this upper parallel trend line for this potential ending diagonal wave 5 of 5. Okay. So I don't want to see it go above 45, 46 cents. If we go above the high made here in August, 60 cents, then we have to consider that we have already completed wave 5 of A. We're in a B wave bounce to ideally about 165 to $2. But then there is plenty of upside potential left, right? There is 400 to 500% upside left. And I think then the next viable pullback is, or the next pullback is very viable. So that's the level to watch. And of course, each subsequent higher high with about 52 cents, etc., are already warning signs. Still prefer this wave count. And again, it shows if we drop below today's low, yesterday's low, then we have a sequence of a lower low in place, and then we might target the 15 to plus or minus 5 cents region. That is my preferred view, but I will be proven wrong if we continue to rally, and then we have this alternative in place. Okay, I can't yet exactly delineate. I must admit, as you can see, we're above the 200-day moving average, so it's bullish. So if you so desire to try to capture all of this, then you know that, okay, we should pretty much hold today's low or yesterday's low, and especially this week's low, right, at around 35 cents. If not, then we're going to go most likely to 15 cents. Let's have a look at Avalanche. Avalanche so far topped right here at the ideal B wave target zone. but I would like to see this subdivide a little bit more, a little bit longer, to about $21. So I would say yesterday's high was wave A of B, today's low is wave B of B, and now we're in C of B, to about 21 bucks, and then we drop. That would be the ideal scenario. If we continue to rally, we go above the recent highs, then something else is going on, and this B/2 might have already completed. How are we doing on Binance Coin? This one reached the ideal bounce target zone picture perfectly yesterday, and it might subdivide, it might go a little bit higher, not necessarily. So far so good. Again, if we break above the recent highs, then we have already completed some of these second waves that we're looking for, or B waves. We don't know yet if it's going to be 5 or 3. Let's have a look here at Bitcoin. So far so good. I like it. It should still be on its way to this higher target zone at around 26 to 27,000. I'm still missing a last fifth wave. I think we had a 1, 2, 1, 2, then a 3, all the way up here, a 4, and now in another fifth wave. Again, we have lots of negative divergence, especially on the MACD, which is quite typical for a 3, 4, 5 setup. Also look here at the money flow. So please take that into consideration. And clearly, if we close below yesterday's low, then we have a lower low in place. But for now, this still looks good. I still think we can achieve the upper end. And we have curve. Let's see. Here we had the green 5 of red 3/C label. And we now have, of course, a 4 and a 5. In gray are the ideal target zones for red wave 3, red wave 4, and red wave 5. In red here is the ideal retrace for a fourth wave. So this one has been hitting the targets reasonably well. A little bit of an extension here on wave 5 of 3 above the ideal target zone. Wave 4, however, nailed right the upper end, and wave 5 is now right here in this ideal target zone as well. And this is why with the Elliott Wave, you can be most of the time about 70% correct. All right, you nailed this target zone, you nailed this target zone. Here you went above it. You still got it, but it went a little bit higher than it ideally textbook picture perfectly should. So you get 2 out of 3 correct. That's why I say around 70%. Same here with the ideal wave 4 retrace. It is 23.6 to 38.2% of the entire length of this red wave 3/C, which is now, of course, a third wave. So we can update this. And again, we exceeded it a little bit. So you can see you can be pretty darn accurate. Had you bought in the target zone, placed appropriate stops according to your risk management, you would have had some nice profits, or you wait simply for a breakout back above the target zone. That works as well. So that's how you use my work to your advantage. So we're now in this wave 5. Fifth waves can always extend, but we have now, of course, a clear impulse. So the next larger decline should be, in my humble opinion, a low risk buying opportunity. This one also, of course, needs to break above today's low, yesterday's low, to consider that a larger correction is underway, and it might target somewhere around this level. Don't know yet. It really depends, of course, on where exactly we're going to top this one. But let's say we're going to top here at $29, $30. That's a little bit of a wild guess, but we're getting pretty close here, as you can see, to the upper end of this ideal wave 5 target zone. Also here, lots of negative divergence, just barely a buy signal for this wave up. So please take that into consideration. But it means after 5 waves up, 1, 2, 3, 4, 5, that we have to consider a 3-wave decline, which will be a low risk buying opportunity. Not a no risk, but a low risk. And that's why we also label things with 1A, 2B, 3C, because then the market has to prove it wants to do a 4 and a 5. Now we're going to look here at Ethereum. So Ethereum as well has this bullish option versus the bearish option. Okay, the bullish option means, okay, please stop at around 1800 to maybe 2050. Okay, that would be a very nice 1-2-1-2 setup from Fibonacci extension perspectives and all those good things. And then we should see this decline back to where we came from earlier this week, somewhere around there. That would be around 1350 to 1450 ideally. Okay, and then we should see the 3, 4, and 5. A breakout then above the resistance levels will be wave 3 of 3. okay? Now, if we continue to rally higher, we go all the way to 2200, for example, it's very possible cryptos can extend tremendously in their fifth wave. Then I think we have more of a ABC pattern on our hands, with C being equal to A. So this is why I mean we don't want to see Ethereum rally too far, because that will actually mean that we then see this wave 5 of 4 to the 6, potentially 300 level. If we get this nice stop here at around, let's say, 1900 plus or minus 100, then we have much better relationship of the rally that started in November in Fibonacci numbers versus the rally that started here in June, because this is a 1 degree lower first wave. So the 1 degree lower first wave is pretty much 9 out of 10 times shorter than the 1 degree higher. Otherwise, it's not a 1 degree lower. If it's longer or equal, then they're most likely equal degree waves, which is then a C wave of a fourth wave, and then the C wave is equal to the A wave. Okay, so please keep that in mind. That's pretty much a bit where we are currently. So it's really going to depend on how high Ethereum is going to fly. The higher it goes, the more likely it will go actually to the triple digits. If it stays nice and easy around resistance levels here, we should be pretty good. Okay, please consider that. We're not there yet, but we have. This is the beauty of Elliott Wave. We are already miles ahead of everybody else. If we fly to 2200, everybody's piling in and they will get destroyed. And we know, well, that's pretty much where you want to chip in and then sit on our hands and buy it in the triple digits. Link, nice. The 200-day moving average, it needs to bust over 750. It's trying, and then the next resistance is of course 780. If it goes 780, we go to 9.4 to the nines. That is then of course next high eights to low nines. Next resistance, and as you can see, we're continuously holding the 200-day moving average. A little bit of whipsawing around it, but at some point it's going to stick. It's going to stick, and please remember the bigger picture wave count. Then we have completed wave 5 in black, of C in blue, of cycle 2 in purple, and we should be in cycle 3. So that simply means as long as Link holds the 2022 low here at around $5.20, it should go to new all-time highs. So from current levels, you have a fantastic 50% downside risk versus a potentially 100 times upside reward. Please keep that in mind. Here we have Matic, or Polygon. It is rallying like crazy. So far, this still looks like a fifth wave. I like it. We've already reached this upside target, the upper end of the upside target. Now it kind of needs to calm down. If not, we have to adjust our wave count once again, which I really would not like to do. But I wanted to point out that we are now in this 1-2 setup, and that the preferred path is for this blue 5 to take off. Okay, please keep that in mind. I do want to still see a viable pullback, because then we have a lower risk. I don't want to chase here. Some people I know are waiting on the sidelines, and I still want to see a little bit of a pullback to have a lower risk buying opportunity. You don't want to chase. And if it runs away from us, there's, as I said, plenty of other we should look at. Then we have Solana. Solana still on track nicely as well for this gray wave 5 of 1. I like it. I see no reason why this should not develop the way I have envisioned it. Still looks good. Then we have the bigger picture wave count here for Solana. It's a little bit similar as Link, in that we should have completed wave C in blue of cycle 2, meaning the downside risk is the November-December low here. I think it was let's see here. In December, that is the floor. $8 is the floor, and the upside reward is of course well into the 300, 400, 500s, if not maybe even higher. So please keep that in mind, and always, even on those longer time frames, have those stops in place, and don't throw everything in the kitchen sink at it yet. We're not even above the 200-day moving average, so it's still very, very early days. And don't chase it. Buy dips. Dips are for buying, rips are for selling. They always are, so please keep that in mind. So far, so good. And that's all I have for today, actually. So a quick review of the summary. There will be no update Monday, Tuesday, Wednesday. I'll be back on Thursday. Monday, I'm out of the office regardless because it's President's Day. Everything's still on track. Matic is starting to extend. I do want to see a sizable pullback there. That is a low risk buying opportunity. Everything else should be on their way to their upside targets. Binance, Coin, and Avalanche should be in their B wave bounces. If not, then they break above their highs. I have to adjust my wave count. Again, I cannot be consistently correct. If I cover here, let's see, 1, 2, 3, 4, 5, 6, 7, 8, almost 10 cryptocurrencies, 3 or 4 out of them will have a wave count that is not correct. I just can't nail everything all the time. It's not to wash my hands in innocence, just the way it is. Everything looks good. Typical fifth wave negative divergence, please keep it in mind. It can be erased with continued strength, but that doesn't mean you have to sell everything and throw everything out of the window. Raise stops, sell a little bit into strength. It never hurts. And the next bigger decline, once again, will tell us if Bitcoin will go to 8,000 and Ethereum to 300, or if they will go to new all-time highs. We're not there yet. It's going to happen. That I'm pretty certain of, but we're not there yet. So with that, have a great weekend. Please email me if you have any questions. I'll be out of the office, but I will respond to emails if you have any questions. I just won't have time to do updates while I am traveling. And I can tell you, I was actually originally scheduled to go to Peru to visit Machu Picchu, Lake Titicaca, and Lima. But of course, due to the unfortunate social and political unrest, I was forced to cancel that trip. So now we're just going to hang around in our own neighborhood. So all money is gone, no refunds, such as life. Take care, trade safe, have a great weekend. And again, don't hesitate to email me. I'm here to help. Bye.